levels with the rip crew vibe. Your guru's gone, he sold too soon. We nailed that flag on the 5-minute zoom. Chart got called it, Fitwit's late. We post our trades, no need to fake. Stocktwits knows and your Discord slow. We were live while your alert said no. Streaming charts, making gains, throwing shade. Community rip is where legends are made. Stocktwits knows and your chat's a ghost. Try to flex but we cook the most. Bears cry foul while the bulls just coast. Stocktwits wins, let's raise a toast. Whoa, whoa, whoa. You bought the top, we shorted the hype. You read our blog, we read the tape right. Volume surged, we saw it first. Posted that setup before it burst. We ride the rip, we fade the fake. We mean the market till the close bell shakes. Tag your tickers, shoot your shot. This ain't a cult, it's just too hot. Stocktwits knows and your Discord slow. We were live while your alert said no. Streaming charts, making gains, throwing shade. Community rip is where legends are made. Stocktwits knows and the algos froze. We're the edge while your strategy blows. Your DMs dry, our alerts explode. Stocktwits wins, just thought you'd know. Stocktwits knows and your Discord slow. We were live while your alert said no. Streaming charts, making gains, throwing shade. Community rip is where legends are made. Stocktwits knows this ain't for show. We move fast while the boomers grow. Forget your forums, forget your posts. Stocktwits wins, coast to coast. Oh, oh. Stocktwits knows. You just caught the top.
If you just caught that awesome intro, shout out to Max and Ryan for putting that together. Incredible work. I guess we're into boxing now. Sort of like this market. You're watching the Stocktwits Community Rip Live. It's Bags, it's JFDI, it's GPAISA. Welcome, fellas. Welcome. How are we feeling today?
Yeah, we're feeling good. GP told us to buy it all from the future.
Yeah,
I did.
I mean, I'm fired up from the new intro. Not that the old one was bad, but this was crazy AI. GP, what do you think?
So first, just a shout out to my father-in-law. He passed a few days ago. I'm in New Zealand. We're celebrating his life today. After the show, of course, but he'd love for me to do this show. So shout out to him, dedicated to him. He is telling me, as I've talked to him over the last few days, that you should have bought the market in April. And if you didn't, you're an idiot. Sorry. No, you're not an idiot, but I'd love to, I'm joking about that, but I'd love to hear from the community, from the audience, why, like, get into the chat, start talking to us. Tell me why. What was the hesitation on you buying on that April 7th, April 9th, April 10th low? Any of those days, that whole week, that whole first couple of weeks, when we started to bottom and we saw the pivot from the government, like what was your hesitation? I'd love to know, because I think the psychology part of this conversation is always helpful for everyone.
Do you think that there's a lot of retail that are still sitting on the sideline that hasn't participated in this? Because the information that I've been seeing is retail's been longer than institutions.
That's for sure, but there's still, like, we were talking about before we started, which was a conversation around we could be potentially doing a blow off top.com type move where we were having monster moves and you could make 100% overnight. We're not seeing that yet, right? It's possible that we see it. We're not seeing 100% nights. But in the 5 months during the .com move, we doubled in the Qs, right? Like we went nuts in the Qs. And so what hesitation do you have? Because at this point you gotta take a look back. Not so like when you do get these, hey, let me do a 50% retrace, 27% move down in 8 weeks. And then a buying stick comes in, you kind of know what to do with it in the future. So this is how we all learn, right? Like the reason we can have these conversations about April is because all of us have lived through this, right? We're teachers of we're students of the market, and we've seen what this market does over and over again, right? It's max pain until you can't take it anymore. And so that's part of the reason why I wanted to talk about it a bit more. Get into our chat. Let us know. Love to hear your take on. I'm not talking about buying it today on July, what is it, 15th, 16th, 17th, something like that. 3 months after we bottomed. But what was your thought process then? What kept you from hesitation, and what would you need to see to change that in the future?
Nick, you were saying something
Yeah.
about this when we were off stage, so to speak.
Well, I think it's a twofold conversation. I think from the technical side, if you weren't getting involved, it's because there's not a technical setup within your tool belt that helps you identify tradable bottoms or tradable lows. From like a psychological standpoint, it probably would have been pretty difficult to get involved if you were being consumed by the news and everything that was going on, because the reason that I really leaned into the COVID analogy is because like the level of unknown and uncertainty that I thought that it kind of brought in, like we didn't know what the fuck the tariff shit was going to be all about. Yeah, okay, some people claim they did or claim they do, whatever. But like, really, do you really know? I don't think so. So kind of back to the technical piece, I think you got to have kind of those patterns, and you got to have those patterns in your tool belt, because especially even as a long-term investor, if you get taken out of the market, this instance, price took out the 200-day, took out the 50-day, took out the 200-day. Like, I mean, it was a pretty gnarly sell-off. There's a good chance that a lot of people got blown out of their positions, from swing traders to even position traders that were like, if you were trail stopping your position, you got blown out. So what are you going to do to get re-involved? I think if you're looking at it from like an IBD, or like, looking at like this, day one rally attempt to like a follow through day, you're just trying to like stack these things and slowly dip your toes in. It's not like you got to be all in, all out. But I'm pretty confident that O'Neill was like, or, in one of his books, it was like, dude, if you get the follow through day, you've got to fucking buy something. Like something. Like, even if it's the index itself, just buy it. I think the looking at the chart, when we had that massive bar on whatever day that was, April 9th, I remember us talking about it because I drew fibs up from the low of that bar to the high of that bar, and I really wanted to see price kind of hold within or above the 50% of that bar. I think the low actually was the 0.618. But price held within that bar. I think the fear there, at least for me, was going to be kind of a slow drip to just complete rollover. But that was in the back of my mind. That's just not the way that I played it. So, kind of what we were talking about prior to the show starting was, Ben, I think you played it really well, especially for a long-term investor. I think allowing politics and the news and all of that seep into you and allow that to influence your investment decisions, like, you're going to have a tough time, because your decisions then are going to be at the mercy and the whim of like whatever the news cycle is pushing at the moment. That being said, I thought that you had I thought you did a good job at articulating your thesis, as in that you were not selling everything. You were just legging out to raise capital to buy new and fresh merchandise.
That's
And
exactly right.
even for the Momo traders, the swing traders, like that's the name of the game, most people are going to be selling a little bit on the way up. Unless you're a straight like trail stop trader and you have that initial rollover built into your strategy or your plan, you're selling on the way up because you know that you're never going to pick the exact top. And it points exactly to even trying to pick a bottom. Like we didn't know for sure that bar was going to stick, but you had a massive wide range igniting bar, price held within the range of that bar. Like you're just kind of stacking these things one on top, and before you know it, it's like, holy shit, now I'm fully fucking invested, or vice versa. So I don't know. That's kind of my take on it. And I do think like to see how the market's behaving even now, unless you're buying like fresh setups, you're getting tripped up if you're getting involved in names that are already extended. I mean, even look, like we were talking about Roblox, and it's like, dude, that thing's literally ridden the 10-day since the thing bottomed out. It's been overbought since
Forever.
Since April. Yeah. So unless you got involved and are just sitting in it, that's just kind of the nature of the beast. Yeah, I think you got to live and learn kind of through these things, and we're always learning. We're always trying to improve. So I don't know. That's kind of my take.
Like Roblox is a great example. When it started to kind of falter over the last couple of weeks, you were thinking this is going to be a good short if it breaks. It never broke, right? It just never broke. And because it didn't break, you finally got an expansion move. Like we've been as option trader, when you have a breakout like this is where you want to put money to work. And for 3 months, if you were anticipating one of those short-term like excuse me, 15-20% moves, you just didn't get it. You got a grind of 5% a week, and your options pretty much closed worthless until this week, where we just expanded. Obviously, it's July OPEX. This is what happens during OPEX. This is where you tend to get your expansion. But you're seeing it in a lot of names this week, which is always interesting because it talks about positioning, right? Going into major OPEX, not just weekly OPEX and stuff like that. It's basically telling you, in my view, is like there's a lot of people short calls, right? Or the covered call strategy that's people been using. Yeah, exactly, Ben. That's part of why I want, so you can transition to talk about what you were what we discussed before. They're getting blown out, and then you're gonna be like, oh, next week it all came back, and you're like, oh, what happened? It's like, well, OPEX happened, guys. But you're seeing it everywhere, right? You're seeing it in Roblox. You're seeing it in, dude, Coin's having a day today. Your Unity is having a day today.
Shitco summer.
Yeah, exactly. But it's been nice to see, and patience has been required. That's for sure. It's nice to also see the expansions. We've been in basing segments for almost 3-4 years now. So
no, Nick, I don't disagree with what you were saying, and generally I take more moral and ethical stands in my trading than probably one should, or I don't know. I'm just comfortable with doing that. I realize that there's another bus 10 minutes away, right? I don't need to hop on everything. And my strategy the whole time was to wait till the first quarter was over. And that was almost nailed perfectly. And I don't want to go back and litigate everything that happened in March and April and, February before that. But at the same time, it did allow me to get out of some of the positions I was in, raise some capital, put things on at work. I posted this on Stocktwits last night. my buys of SOXL in the $8, $9, $10 range in the single digits, that's generational right there, right? Like it's already up in the, what is SOXL today? 27 bucks, 26, 23. That's a great return, right? And I put money to work near the bottom. I had sold some puts to get in Broadcom to make it one of my larger positions. I didn't pick the bottom on that one. Not going to claim to. It still had 15% more to go down. But those were names that I wanted to expand in to get in. I bought some of my other positions and just fortified them at lower prices. And it's worked out great, except for this past month where I sold calls on some of my positions. And that's what GP was getting to. We can talk directly about Roblox. I sold a $101 call on my Roblox shares. I still have plenty of shares, so I'm not getting out of it. But I was okay to sell this thing at around $101. And typically what we'll see when a stock gets above 100, right, is it might push into the 110 or the 110s, but then it sort of starts coming back down to earth a little bit. And it might have closed somewhere in the lower 100s. But I was taking a good premium, and I was betting that I was going to sell my position close to the strike, which that's a double win for me. But then you have this right here today just going bananas, right? 6% up today alone. I was looking at the weekly chart earlier, and I think 5 of these 14 weeks have been greater than 10% gains on Roblox. It's just been insane. So I was betting with my covered calls that it's going to go over 100. I'm going to sell it for 101, and here we are. But it didn't work out, and that happens. I was wrong. I'm going to leave about $2,000 on the table by not just letting it run, and that's okay. It's not ideal, but it's okay. I'm a big boy. I've made more than $2,000 this month, so it's not a big deal. SoFi, same thing. I sold calls on SoFi. I think I had $18 calls, and I rolled them out to 20. Now look where we're at, $21 for next month. So I'm about $1,000 underwater on this one right now, if this closed somewhere around here. And then the last one was AMD. You guys know how much I love AMD, and I loaded AMD during this sell-off, right, that we were just talking about. And I did 145s. Felt pretty good about it until yesterday, right? The huge gap up, which all semiconductors got off of the NVIDIA news that, China's market's open for semiconductors. Just a huge gap up. And now I'm 2 days away from expiry, and I'm going to get called away on 100 shares of AMD. So I'm losing about, $2,500 on this one too. So in total, I'm closer to $4,000, I think, at this point of what I'm losing. That's on the table. I left on the table, so to speak. But I did get premium. I am selling the calls I am selling the stock at the strike price. So it's not a total loss. But could I have done better? Yeah. But my reasoning at the time I thought was sound, but the market has proved me a fool. There you go.
Yeah, I'm looking at that Roblox. I mean, there was a trader on Stocktwits way back when that went. His handle was, I think it was 21 trader or 121 trader, and I think he DM'd me because I think he noticed that I was just getting chopped to fucking pieces, and he said, he's like, dude, he was to get me off the dailies, and he was like, dude, not every day matters. Part of the beauty of like moving averages is when they start to trend in the direction of your trade, you can kind of take a step back and say, all right, unless you see something out of the ordinary, let's say like an outside reversal, like a major gap up and fade where like you engulf the entire range, volumes there. Like not every day matters. Just let the trend work. And if price is respecting certain moving averages as well, you can use that as like a behavioral thing. As in, if price is respecting that moving average for whatever reason. I mean, no, do I look at like moving averages as these like kind of concrete areas of like support or resistance? No, not really, but you can still use them as kind of like a guide rail. And it's kind of, it always comes to mind when price starts to trend. And I don't know, I think that's kind of like what we're seeing again, because it's like, you know, I mean, just God, looking at Roblox, I bet you I was probably chirping about a 3-week tight there at 100, and it's like,
Gone.
dude, it would have taken some fucking nuts to buy that 3-week tight. I don't necessarily look at tight as an entry. I would look at it more as either an add or a continuation. But God, yeah, I don't know. I just kind of chirping that out there because I think some people need to hear that. And on top of that, even if you were expecting price is extended and you are waiting for a pullback to get involved, there's a difference between waiting for price to pull back and you thinking that price is just going to roll the fuck over. Like, people think that like just because price is extended and we start to roll or correct, that it's like, oh, the end of the move, which again, obviously we're not seeing that at the moment. GPI did I cut GPI?
No.
Nope.
You live and you learn, right? I think
Yeah, totally.
I think that's what our whole shtick has been about for these few years that we've been on it. You gotta take shots, right? And we make our best calls based on probability of what we see, and we're not 100%, and none of us have ever claimed to be 100%, but we win a lot, and that's what matters the most, I think. So, hey, GP, one thing about this market, and you brought this up earlier, is the breadth.
Yeah. So like names have been working, right? Those have continued working for the most part. Rocket Labs is one of them, right? It tagged a support level and then it's been nonstop up. It hit that 26 level and has pretty much kind of doubled. Hit that 15 level during the April pullback, and it's almost tripled, right? So since then, but these are the names I expected to kind of participate and do their thing. It's having its expansion move from all-time highs. It's a beautiful candle. It is a bit extended. I bought in at 26. I began selling this week around 42. 42, 44, 45. I'm down to 2/3 of a position. I will probably trim a bit more to get to about a half position today. Can I still keep going? Absolutely. But dude, I'm up 80, 90% in a matter of a couple of weeks. There's no reason to faffo around here. But outside of Rocket Labs, there's other things that are starting to participate from bases that they've been building, right? We've talked about Wayfair already having a huge move off the base. But the ones, right, like this is over 100% move since the bottom, right? It's still in the middle of the base, so there's still a lot of room to go here, a lot of accumulation. This one will probably need a bit more time, but things that haven't participated a lot, like Unity, as you had up there yesterday, just before. Unity is having its expensive move out of the base that it formed, right? It's still in the middle of the base. The top side of the base is I think in like the 38 to 40 range. But what I think people like, a lot of people are like, oh, this is euphoric. This is no, I thought it was kind of ridiculous that we were back to bases that we established 3 years ago in 2 months back in April, right? Us just getting back to the top of the base means the middle of the base means these moves haven't even really started, right? You have so many names that have gone this, right? Like this was COVID, this was the end of COVID, and then this for the last 3 years. And they're starting to break out and expand. Are there names in there that don't belong that are breaking out, that are part of like the shitco summer degenerate economy that we've talked about the last couple of weeks? Sure, but there are quality names that are finally getting their expansions to take hold and take place. So you might want to look at Unity is one of them, right? But there's expansive setups that are going on that are broadening the breadth. In my opinion, there's a lot more stuff participating, and so you would have seen it yesterday when IWM, because it's the shittiest index on the planet, decides to take a monster dump for absolutely no reason today. But if you're looking at the move in IWM, it was down, I think, like 2% yesterday. There's a lot of names that follow the IWM and its trading patterns that diverged yesterday, right? Like, and so you're starting to see IWM is trading on its own a little bit in terms of like the index and flow and stuff like that, but the names in it are doing much better. Banks have been leading us throughout this process. Fintech banks have been leading us. We've talked about we talked about Hood, we've talked about Dave, we talked about SoFi, we've talked about so many different names that are in the space. And we talked about how you shouldn't be looking at Square, XYZ, right? You shouldn't be looking at PayPal, which have underperformed for the most part comparatively to their peers. And there was no, like, from a technical setup, there was no real accumulation after beatdown after years. But the accumulation was happening in Hood, and it was happening in SoFi, it was happening in Dave. You could see it across the board. So it's nice to see the expansion start to come out and hit other names. Yes, are we euphoric? There's no doubt here. My personal opinion on the markets is we're going to 6,700 on the S&P before we get a significant pullback. And you know where that significant pullback will most likely be? Back to retest the 6,100 area, right? Like the double top breakdown that we had. When you typically have these double top breakouts, it's a 10% move upside before you get a significant correction, right? So 10% from 6,100 gets you to that 6,700. It's kind of the measured move. It's the 123.8 fib extension. There's a lot of technical reasons why 6,700 makes sense to me. 6,738 or something like that is what I have, give or take a few pennies here and there. But I think that's where we're going here, and this grind is gonna. Everyone is hoping that OPEX releases the ability to short. I don't think you're gonna get that yet, and so we're gonna continue grinding, maybe into very similar scenario like COVID, right? We continued grinding all the way until August 31st of 2020, and then do you remember how we ended? We ended with SoftBank coming in and buying
all the
billions and billions in calls, right? And they took a bath on all those calls. So that's I think where we're kind of holding. You had that quick nasty correction that started in September. So I think that's what we're probably kind of setting up here. We followed the COVID game plan, not exactly, but pretty damn close to it. So that's where I think we're going with, especially as this breadth expands, more names participate. If you hold Apple or Tesla, I am sorry, they are not partaking in this cycle. You suck. So I'm just kidding. But
GP, I think we're being here on Stocktwits, we're generally talking to the retail community, retail traders. I think one of our superpowers is the ability to be nimble and set alerts. Like there's no, you brought up like XYZ, for instance, or even Tesla, whatever. Like people need to rid this idea of like them needing to catch the absolute bottom in something. Like or being the first to enter or whatever the fuck they want to like say about it, because it's really kind of annoying to see. Like if you're looking at XYZ, for instance, and you just say, okay, the damn thing's in a stage 1 base, like just set your alerts. Like set your alerts above the 200-day, set your alerts at the top of the stage 1 base, and move on. Because if you're a swing position, even a day trader, the name of the game is flipping your dollars. Like you're not like, why are you wanting to be involved in a dead money stage 1 base? Because you don't know, unless you're privy to something, you know, and likely you're going to need a catalyst for that thing to bust out of that stage 1 base. Can you time that perfectly? I don't. Maybe you can, maybe you can't, but I don't want my money tied up in a stage 1 base, because I think that's a waste of time and a waste of money. So I think I just was happy that you brought that up, because I just thought that, like, I kind of like the look of XYZ, but I have no reason to get involved here. Just wanted to throw that.
But if
piece
you're
out there.
So the reason I bring that up, right, is like trying to take a look back at charts. We've talked about XYZ for the last couple of years. After all these big beatdowns, you would have expected, and everyone talks about valuation, talks like,
Yeah.
Why I bring it up is because there's value traps that set up in these types of markets. And if it's not performing terribly, right? It is 50% off the bottoms or so from April. But let's say you woke up April 7th, April 8th and said, shit, I'm going to hold my nose and buy some things, right? And you decided to buy XYZ.
Sure.
You have underperformed the market over other ones. So why is that important? Because I think in cycles, some things do better than others. We just talked about Apple and Tesla. Apple is up whatever 20%, but it's been up 20% since that bottom and has done absolutely nothing since. Tesla is up 50% from the bottom and has done jack since, right? So yeah, you would have caught 20% moves, but you missed out on. So how do you identify what's going to perform much better, right? And that's technical structures, that's volume, that's accumulation, that's stuff that you have to build up in terms of the chart before you can take these positions, right? So am I bummed that I missed not adding more XYZ? No, not at all, because I chose to make the distinction between I even posted the chart on April, I think it was April 5th or April 7th or whatever it was. You buy HIMS at 23 twice on the weekends, every single day, because you were hitting a rising moving average, you were hitting a golden cross, you were hitting a retest of a prior all-time highs, you're hitting something with a lot of accumulation, right? And in that moment, you would have had a 200% move in a couple of weeks, a couple of months, and yeah, now it's come back and it's in the next stage, getting ready for another break higher. But how do you identify those, right? Like I think I talked about is like, what's your process? Your process should be looking for names that are hitting rising moving averages on ridiculous pullbacks, right? Those are the strong ones. Those are the ones that are going to outperform. So if your trend on multi-time frame views, monthly, weekly, daily, all start to align at the same confluence of points, right? That was the cues when it hit 401, 51%, 50% retracement, et cetera, right? But you have to take a look at this stuff and do the work before you get to April 7th, April 9th to understand what's going to be coming in. And you didn't have to buy on April 7th, April 9th, as you just said, right? You could have just watched the action. And the action was the Qs put in a 12% up day on the most volume we've seen in a decade. Your automatic flash rate
That was
should
such
be
a
up.
day.
Dude, but your automatic flasher should be up, right? To say, okay, that is completely different than what we've seen since February, right? That is not. And on top of that, we talked about this, was every technical support point up until that point broke without much resistance. It was selling throughout the board. And then you have this one day where we not only have this massive volume second historical day, but you also reclaimed all those pivots in one single day, right? Like those are all those confluences. So I think it's the reason I talk about this now that we're about a quarter of the year into this rally here is giving you an opportunity, because we get these every couple of years. Apparently it's just necessary for life. These 20-25% ridiculous moves down. And so how do you identify this versus other names, right? And I think Hostel, right, asked you about it. Like how do you buy something, right? In this moment, it's like that's how I was buying stuff. Do we have a rising 200-week moving average? Do we have a rising 50-week moving average? Do we have volume to boot going into the breakdown, right? Like, do you have confluence of points? I need usually 3 to 4 confluence of points to buy those points, right? So you got to do the work going into this stuff, right? And so yeah, I just wanted to address that. I think it was a question from one of our longtime followers. So
yeah, I was going to address that with my Palo Alto buy this past week. I bought that last week, and I mean it's been trending, right? A little bit of a bobble here over the last couple months up here near highs, but at the same time, how do you decide when to buy? And I usually make a price range. You guys know I love channels, and you guys know I love to see when price comes into a channel. And I mean, I put my alerts on, and lo and behold, I mean, it got hit at 189, and it's no thinking about it. It's like, there's where my alert is. I'll buy, right? Similar to my Broadcom buy back in March. Price felt where I went as far down as I thought it probably should be, and I hit the buy button because I had a triggered alert down there. I'm primarily excuse me, I'm primarily an alert trader these days. So I'll come in and set it. You'll look at Apple here. I've got alerts on Apple for this week, for the past couple weeks. So, you know, above this 213 level, I mean, this is a trending stock, and I don't feel like I'm chasing it. But above 213, that's breakout, and we had a failed breakout last Monday, and we're kind of petering below that. Below it is 200 even, right? And it's not a lot of thinking to it for me. It's just identifying these levels, and when the alert hits the upside, I'm buying the breakout. When the alert hits the downside, I'm buying because that's my first tranche in.
Yep. And we've discussed this on so many names, right? Like even AMD is a great example.
Yep.
It's you to me, the setup was always buy in three lots, 3 points, right? 3 points of confluence. Those are the points I want to buy. And if you bought, you weren't worried too much about what was going to happen. And then now, what are we, 100% move off the bottom now for AMD?
Yep.
Just about, right? And so like you don't have to chase the market if you can identify trends, right? And the trend is AMD trades like shit 99% of the time. Once it stops trading like shit 99% of the time, you get these moves. Oh, look, it looks exactly like 2022. And that's exactly what you got here. And what this indicates is higher highs, higher lows. So what does that mean? We're probably going to get a point here, I think around 170-ish in AMD, where it pulls into this, it's all over, right, mode. Let's say it goes into August, and August until the end of the year or whatever it is, it just has this flag that forms, right? That trend line that you have there, Ben, from 2022, right? Yep. It had that big move off the bottom and then had that 3-month flag and then took off for new all-time highs. But what's the trend here? The trend here is higher highs, higher lows. So for AMD, that should mean we're going to take out all-time highs next year. Might even happen this year, but most likely we'll take out all-time highs next year, which is a 227 target, right? So if you're in this position and you're like, what do I do with AMD? It's already 100% off the ground. You have to
You
know
still
where
have 43% more to go.
But you also have to know where you think it may go, right? I'm not saying it will go there, but if you're anticipating that it's a higher high, higher low situation and it's going to go eventually take out all-time highs, the goal for you should be to get the cheapest price that you can, right? So find a method that works for you. Maybe it's buying in batches. Maybe it's waiting for the absolute moment of of pullback or whatever it is. But that's the trend. The trend in AMD over the last 20 years is higher highs or 15 years is higher highs and higher lows, and ridiculous lows when they happen, and painful highs when they happen, right? But this is how you kind of identify trends. What's the overlying? Because if you bought AMD in 2022, or if you bought AMD today, you're flat. Let's be honest, right? So what's the trend? The trend is over the last 3 years, 4 years, we've done jack shit.
I think it's kind of the beauty of looking at the larger time frames and the larger time frame patterns, because typically, like, you know, whether it's a descending wedge, a descending channel, some of these kind of like bottomy-esque or like kind of stage one like ranges, the measured moves on those is typically where the pattern originated. So AMD, for instance, you know, if you head out to the weekly, you can kind of, or even just where it's at, oh, you're on the weekly, you can kind of see somewhat of a descending wedge or a descending channel build. So your bias there, or your belief, is that, me personally, I don't have a reason to say I think price is going to take out all-time highs, but I do think price is going to gravitate towards the all-time high test because that's where the pattern originated. So just to kind of like, you know, where I agree. I think your goal should generally be to get the lowest price, or the cheapest price you can, but also the lowest risk, or the most like spots where you can easily define your risk. For some traders, that might not be the lowest. You know, their strategy or style just be buying the breakout, or buying strength versus buying weakness, and then obviously, you know, time frame plays a part in that too. But that's just kind of how, like, I think that's why I generally love to talk about measured moves and patterns, because it's not so much that I think price is going to go right to like 201.50. It just gives me a zoomed out view of where I think price is going to gravitate towards. And then again, like, have your sell rules, whether you're trailing or, you know, whatever it may be. But AMD, I think it's I don't know, AMD.
Hey,
Yeah,
guys,
love-hate relationship with AMD for sure.
We had a question. How do you set up your 3-buy positions, and how much percentage apart? I answered that in the chat, but I was wondering, GP, specifically to AMD, can you break that down, how you set up those 3 tranches down, or if it went the other way, up? And same thing for you, Nick, if you got a minute.
Sure.
Yeah. So for me, the 126 to 120 area was the first kind of buy point. If you have it on your chart and expand out for me, Ben.
Yep.
Right. So that midpoint flag that happened in the AMD cycle from the 2022 bottom to the highs, the all-time highs, is that first candle. I'm not talking about the red candle that followed, but that breakout expansion candle was to 126, I believe, right? From in 2023, after it bottomed in 2022, right? So where did that expansive move end? And that ended basically at 126, right?
Yep.
Where's that green candle? So that was the first kind of area of where you wanted to buy. Why did I say 126 to 121? We came back and retested that 121 level in mid-July of last year, right? So now you have a confluence of two areas. The first expensive move out, the retest of that move out, right? So that's the first area. If it holds, maybe AMD is not going to be a turd as it always is, and it's going to hold and go higher. But AMD is a turd, so it does what it does. But you see it, 121, 126 area was a confluence of points. If you go back, there's a third confluence of points, and that's that 2021 high, right? That wick high where we kind of broke higher, but it was a trap ultimately. But that's the same kind of area, that 120, 116 to that same area. So it's a confluence of areas. So that was the first one. The second one was that where that flag ended in 2023, right? Which is around 92, 93, right? Somewhere around there. But you can see that with three different points of confluence too there, right? That's where the flag ended. That's where we kind of based and broke out in 2020 and 2021. So you have what we know as price memory, buyer support, whatever you want to call it. But that's the second area. And the third area was just a fib retracement of the move. I think it was like 78.6% move, which was right around 75, which in nasty downtrends that are in good names and it's not a fundamentally broken stock, 78% retraces tend to be the place where they hold as well, their final kind of holding place. So those are my three points. Everyone has different ways of identifying them. I like zones, but the reason they were three for me was, first, I'm an optimistic bastard, and I think that the markets will not replay the exact same scenarios 2022 in the middle of an AI freaking cycle, but it did. And so I wanted to be cautious of that. If I didn't get it, then I would have been adding on strength, right? Let's say I bought at 121. If it didn't break down from there and it kept going higher, I would have identified three trenches to buy up higher. So two more, right? So either you're going to buy strength and buy weakness, but you don't want to buy too much in the middle.
This is a fantastic chart to really see that. I mean, if you look at the $96 area, you see all these points and all these wicks, right, in price where it either failed or it went up, right? Failed again. And it's not an exact number. I think people get hung up on an exact number. Bottoming is a process, right? Finding the bottom of your range is a process. And when you see multiple confluences, and this is right there, right? When it's bang on basically within $1 or $2 of a line, that's where you see buyers or sellers step in.
Yep.
Nick, what about you?
I'm in AMD currently, but I off the lows, I opted for NVIDIA versus AMD. But I did just pull apart the daily to kind of give if I were to have played AMD perfectly, I'll tell you how I would have looked at it or wanted. I will tell you how I think I should have been looking at it.
Go for it.
I think the two candles that stick out the most are the 430 candle and the 5/7 candle. If you didn't get involved on the 430 candle, that's the candle that I would have said would have been the follow through day on the daily. I'm sorry.
Yep, I'm there.
And if you didn't get involved there because price was still, let's say, below the 50-day, the moving averages were still actually trending down, at least the 10 and the 20. Likely you would have been getting involved on the 5/5 or the 5/7 candle, which neither were very pretty, but price popped above the 50-day and it was showing you that price was holding right there. Where that spot is, I kind of refer to that as the pocket. And the reason I call that a pocket is because the 10 and the 20 are curling right under price right there, the 10 and 20-day moving averages. And interestingly, they're converging with the 50-day right there as well. I think people probably would have been selling on that 514 candle on that kind of like gap up. But the big candle that sticks out is the 616 candle, where you got the final rip and like the wide range bar through the 200-day. That candle right there should have been the one that said, if I'm not involved in AMD, this is the one that like, this is igniting the move. And from there, you saw price kind of just drift higher. You honestly should still be in it because, again, from the bottom, price hasn't broken the 20-day even once, even now. So I kind of regret not getting involved with AMD. I think that I had my own issues with AMD, which is why I just kind of opted for NVIDIA. But the way that I would be looking at it would be buying on strength versus like necessarily weakness. You could take any one of those days though and say, like pretty much any one of the ones that kind of stick out and say, if you didn't get involved in that particular candle, as long as price was within that candle, like on a following day, like why not get involved in it? I think when you're picking the stocks that you want to be involved in, there's a reason why you want to be involved in it. So if like AMD was like at the top of your list for whatever the reason may be, it just is your favorite stock or I don't know, whatever. Like
you love Lisa.
Kind of like stair stepping your plan. Yeah, for sure. Generally speaking, though, like if I'm buying Lisa, like on a what's that?
I said now if Lisa starts to sign Jensen's balls, get the out.
Yeah. You know, like again, it's yeah, everyone's gonna have their way of picking their stocks, and I think it's just a matter of kind of layering in, layering out. Again, you don't need to be all in or all out. Generally speaking, like if I ever mention that I'm in a runner, it's likely a position that's small enough that's pretty meaningless. But if I can double it 2 or 3 times, it becomes kind of a meaningful size of a position.
Yep.
So the nice thing about having a runner on is that you're risking a lot less. If the pattern fails or it rolls over, it's not really that big of a dinger. On the flip side, if you get lazy, which I have a tendency to do at times, and I get stuck in a runner, it's like, okay, great, I caught a, I don't know, 100% move or 50% move in this, but it's in such fucking small size that it's not moving my money needle at all. And it's just kind of, again, my own battle and how I sling it.
We got less than 10 minutes left. I do want to take some time and pop on the crypto side of things for just a second. I know GP's pick last week, his last word was Ethereum, and boy, has Ethereum not let you down. 6.5% today. I've been on this kick for a little while, and similar to what you were explaining, Nick, and what we've gone over several times, this is indecision in this chart, right? This is the weekly time frame. These are high wicks up and low, long wicks down, and that's indecision in that price range. A lot of people got scared out because they thought the bottom was, they thought it was going to go down to a new low right there. And then it just got bought right back up. And I don't remember when I said I think the bottom is in, but that's 40% ago. And I'm happy with my Ethereum purchases. But if we go back and look at what we talked about last week, right? And this is the chart for me. I know some people don't believe in Bitcoin dominance versus all other coins, but look, we're rolling over. Bitcoin is still going higher, but it's not going higher greater than these altcoins. We breached the 20 weekly today. And once we come in here to this 50 weekly, altcoins are probably going to go up another 20, 30, 40%. And that'll be like December that we just had, right? When this was happening right here. Now, will it break the 50? I don't know. I'm not a Bitcoin maximalist by any means, but Bitcoin's still daddy. So we'll see. I shared the way money flows in crypto. This is playing out exactly to that. And like we always do, we're just giving away alpha for anyone who wants to be actionable. This is not financial advice. This is just what we're doing in our own accounts, but we're sharing it with you. And GP, what do you see on this Ethereum chart that made you like it so much last week?
I don't know. I got amazing eyes.
You do.
I don't know. So,
well, this is where you called
Yeah,
it right here. That bar right there.
but I was buying underneath, right? So, the bar right there was the expensive, but like the thing that stood out to me, go back to that weekly chart for Ethereum, is after all those indecision candles, right? As the moving averages start to curl up, not down, they're curling up. You have a breakdown candle. What a normal human response there is, oh shit, I was wrong, let me get out. But what the chart doesn't tell you, what the chart tells you there is you're not wrong, they're just being assholes. And you can see that after 7 weeks of indecision on a big breakout expansion candle, highest volume since 2023, and you have this kind of breakdown, how do you identify it's false? Well, one of the biggest ways to do it is where's the sellers? There's no sellers. I know people don't like volume. I love volume. I think it helps more than it hurts personally. And I've definitely seen it hurt me. I'm not saying it can't hurt you, but I like seeing moves that after a tight consolidation break down, but there's no volume to follow through. That tells you that the buyers are still there, but the sellers are trying to push it lower. And if they don't succeed, what's the 180 of a breakout failing is that the breakdown is also failing. So what that does is it creates a level of buying, that wall of worry that we talk about, that gives you the liquidity to move higher, right? So for me, this was a much better buy than Bitcoin was for me, right? Bitcoin was in a monster uptrend. It's already breaking out. It doesn't need liquidity to move higher. It just needs relative news or whatever it is. Whereas Ethereum had given you this, what a lot of people talk about, spring setups, what they talk about. I talk about liquidity grabs. And that was liquidity
100%.
grabs. Liquidity grabs give you the power to outperform, right? Look at, we'll talk about not just the crypto market. The 27% move down in the Qs was a liquidity grab, right? A monster liquidity grab, and look what it's done in 3 months, right? So I prefer liquidity grabs. It creates chaser mentality, thinking they've missed the move, which is the wall of worry, which pushes us higher.
It's the beach ball, right? You take a beach ball underwater.
Yeah.
Yeah.
So I talk about this with my cousin quite often because he's a breakout trader, and on his breakout trades, he gets his 5, 10, 20%, and he's happy with it. And I'm more of the, let's find these powerful, let me sit tight and get it right setups where you're like Rocket Labs, like HIMS, like ASTS, like a lot of these names that had monster liquidity grabs going into April on very bullish weekly and monthly trends, right? And so that was Ethereum for me. It's like, oh wait, we have a golden weekly cross and we just died? What? Okay, there must be something I'm missing, because there's got to be a lot of sellers. Oh, you look at that. Oh, there's not many sellers. And so that was my Ethereum conversation. It is now going to outperform because the chase is going to be on across the board. Your Bitcoin dominance just goes to that conversation. So if like I got long a stock named SBET today. I don't know anything about it outside of the fact that it's an Ethereum play, like MicroStrategy was for Bitcoin. So I got long, just under 32 today. So you gotta. Am I holding this forever? No. If it fails tomorrow, I'm out. Right? Like it's not going to be one of those. I don't know anything about this name, but I'll take the percentage gains where I can. Right? You got to stack that alpha over time.
All right, we got one chart request in real quick. Levi's. Nick, you like Levi?
I mean, I like it. I even kind of like it right here where price is about to kind of reclaim that gap low. I think if price can hold here, it's probably going to run. Just looking at the range, I mean, again, like if we're talking about building into it, I'd probably have my alert set somewhere around the 2350 range. Seems like a kind of a slow mover, but I mean, if price, I have a tough time with retail just in general, just because I'm not a shopper, so I just have I have a tough time like thinking like, God, this company can make like that much money. Like I just don't get it. But either way, yeah, it still looks good to me. Kind of like in a big IPO base too. But yeah, it's kind of where I would have my alerts. Probably like if you're not already in it. I think Randy was one that mentioned it.
Yep. Shout out Randy.
Yeah, totally. That's probably where I'd have my alert set. And
guys,
then just kind of
wrap it up
work from there.
Oh, sorry, Nick.
Yeah,
sorry,
totally.
I thought you were done.
Oh no. Hey, if we're wrapping it up, earnings season's around the corner. We're kicking it off. Again, like have your alerts set. If there's shit you missed, don't sweat it. Set your alerts lower and try and pay attention. Start journaling the behavioral things that you see. So if the fact that we haven't really sold off going into earnings season, if you start to see names get hit, see how quickly they get bought up. If you start to see a theme like really take hold where, price gets drilled and then, it gets bought up in the first day, 2 days, 3 days, just make note of that kind of stuff because I don't know, it'll add to the edge, add to your edge.
GPAISA.
And trust Barry.
I think to put it short, right? Like, spend time, build your craft, be prepared, and love everyone. Time's short, right? For life, you never know when things pass you by. Be kind, leave the world a better place than you entered it. All the different things that loss brings for people. So just love you guys, and I'll see you back when I'm in the States.
We love you, GP. Sorry for your loss. Our thoughts are with you all the time, but we love you, and thanks for joining us today, guys. That's it for the show. Appreciate everybody for being here. GP, thanks for jumping on. Nick, always great to see you. And that's it for the Community Rip. We'll see you next Wednesday at 2 p.m.